Let's move on now and focus on the infrastructure space. The NHAI ordering activity has been relatively muted in FY22 and FY23, but the orders are expected to rise significantly considering we are in a pre-election year. To understand the key trends, project execution timelines, the heating competition, we're joined by Vinayak, the MD and CEO of Tata Projects, and Nalin Gupta, the MD of JKumar Infra. Gentlemen, morning to both of you. Mr. Gupta, I want to start with you, just to put the numbers first on board, right? What has the NHAI ordering activity been so far in FY24? And has there been a rise compared to what we've seen in the preceding years, which was pretty muted?
Well, I would say that there is a substantial ramp up that we should be seeing in FY24. And it would be by around 16 to 21%, that is to the tune of around 12,000 to 12,500 kilometers. This is mainly on account of the healthy pipeline of projects, increased capital outlay of the Government of India and focus of project completions ahead of the general elections. So though FY23 was little disappointing, I would say, in terms of the order inflow, but I think this Q3, instead of Q4, usually we see that the order inflow is pretty high. But my feeling is that due to the elections, this year we should see a good ramp up in the order inflow by by Q3 of FY24.
So you're saying, just to confirm, you're saying 12,500 kilometers of ordering has happened so far or is expected to happen in this fiscal?
It's the execution is expected to be happening because there is already around 50,000 crores of jobs which are already in pipeline. So I think the order inflow as well as the execution, both will be seeing a good ramp up due to the coming elections.
Mr. Pai, if you could, give us some insights on what the numbers have been according to you. Do you differ in any way with what Mr. Gupta has to say? And how do you expect the situation to play out in elections next year? Sir, your audio is on mute. If you may just kindly unmute.
Okay. Oh, I don't think Mr. Pai, can you just unmute yourself? I think that'll take some time. Mr. Gupta, okay, so just a follow-up over here. I mean, you were talking about how there's almost 12,500 kilometers of order execution that's expected in FY24. Got that. For your own business, what are the big triggers that you see? I mean, what kind of growth are you looking at in FY24? What is your own order pipeline and how much could you be executing this year?
Well, so JKumar, we have done a top line of around 4,200 crore in the fiscal year FY23. And we expect to grow at a CAGR of 15 to 16% on a year-on-year basis, which has been our track record for the last 5 years. We have been growing at a CAGR of 16 to 17%. So I think with the strong order book, with the order book of around 11,500, which was there as of now, and with the L1 of around 4,000 crores, 4,600 crores worth of projects. And there is a good pipeline, which is for the projects that we have already bid. So we expect that surely we'll be growing at a CAGR of 15% on a year-on-year basis.
And Mr. Gupta, by FY27, you have a target of hitting 20,000 crores of an order book, I believe. How will things shape up with FY27 in mind?
Yeah, so we are targeting at a top line of $1 billion revenue, becoming $1 billion revenue company, and taking the order book to close to 20,000 crore. And I think with the the contracts that we have already bidded for and that we are going to bid in the past in the coming 6 to 8 months time, I think we are pretty confident that we should be able to take our order book to 18 to 20,000 crores.
Okay, 18 to 20,000 crore of the order book, and currently I think it's close to about 12,000 crore rupees. So you also have a vision to improve your margins to 14 to 15% by 2027. Considering that inflation has started softening, commodity prices are on a downtake, do you think you will be able to achieve this operating margin guidance earlier, or you could perhaps even exceed it?
Well, so I would say that we are already at a EBITDA margin of 14 to 15%. And our endeavor is to work towards improvising it and we expect that by FY27, we should be able to get this margin to around 17 to 18%. So we'll be striving hard to achieve this target.
All right. Hold that thought, Mr. Gupta. Mr. Vinayak Pai is back with us. Mr. Pai, good to have you back. I'm sure we are audible and we're looking forward to hearing you as well. FY23, there were some operational losses that we saw from Tata Projects. How are things shaping up for FY24? Will you turn, will you be well in the black and all operational issues are sorted out?
Thank you for having me on the show. Good morning. And we are going through a sort of transformation in the company at this point in time. Some of the legacy projects on which we had challenges have been completed or are getting completed. So we look forward to better results in this financial year and, sustainable performance in the days to come.
Okay.
All right. Mr. Pai, so you're saying that things will improve from here on. And from a stock market perspective, though Tata Projects is not listed, you have Tata Power that holds 47%, I think, stake in Tata Projects. So that becomes rather important. So good to hear that you're saying things are getting ironed out and they'll start looking up from here on. Just a quick question. Yeah. Any plans of listing Tata Projects? Have you heard anything on those lines?
That's up to the shareholders to decide, and we'll come back with more updates later.
But is that in the pipeline? Is there some talk on that?
At some point in time, the shareholders will look at what's the right time to do it, and we'll come back on that.
Okay, so this calendar year looks like it could be the right time?
No comments on that.
Okay,
we'll have to check with Tata Power and then they come the next time then.
Okay, we'll do that. But of course, you know more than us, so that's why we're constantly asking you about it. I'm sure the investors are also looking forward to that one. But Mr. Gupta, I wanted to come back to you on, the numbers that you had shared. Just one clarification. You said the order book currently from 11,500 crores is expected to jump to 18,000 to 20,000 crores. By when is that? By FY25, or is there a bigger timeline?
Well, see, if you look at this quarter's numbers, we are already L1 in projects worth around 4,000 crores. So I think which takes my order book to around 16,000 crore, 15 to 16,000 crore already. And still we have a decent 8 to 9 months to go. So wherein I expect that we should be able to reach a order book net of by FY24 March by around 16,000 crore.
Okay. And, there's been a lot of competition in this NHAI bidding as well. How are you looking at that? I mean, are the current levels unviable for bidding? Is it sustainable? And can you break up this order book for us in terms of different segments? How much are you getting from the road sector? How much from the metro?
Well, so on an average, we can say around 50% more or less comes in from the metro sector, and 50% coming in from the other civil engineering contracts, including national highways, roads, flyovers, building projects, riverfront projects, road tunnels. So it's a 50-50 more or less order book that I would say in terms of the top line as well as in terms of the order book.
Mr. Pai, have you seen any front loading of orders ahead of the election cycle? Do you think this time in the last few months, we've seen more orders than we typically see, say, in the comparable quarters of, comparable months of last year? Is there any election cyclicality, based on what we're seeing right now? That's the first question. And secondly, the large spending has been done by, the government. And I think 80% of your revenues comes in from government and about 10% from other Tata Group companies. Are you also seeing increasing bids from other private sector companies? Just want to understand if the private capex is also on the uptick.
Absolutely. I think we are seeing an increase in activity like never before. At this point in time, as per the budget, if you see, the government talked about over 10 lakh crores investment in infrastructure. But if we add to that the state investment in infrastructure as well as the private sector investment, it goes to over 26 lakh crores. And that's, almost more than 9% of the GDP. So the infrastructure is well and truly one of the critical drivers of the economy. We are seeing increased activity. And definitely on the private sector, driven by the PLI, and the semiconductor mission and the data centers. Those are the areas in which we are seeing significant investment. And of course, also remember that, the infrastructure drives, has a multiplier effect and drives investment in sectors like cement and steel. And, in steel, we are seeing a lot of investments in the private sector. So, we are seeing definitely far more opportunities coming up in the private sector than in the past.
Okay, more opportunities in the private sector. Appreciate your thoughts. Gentlemen, thanks for taking the time out to speak to CNBC TV18, Mr. Pai and Mr. Gupta.